Raamdeo Agrawal, Joint Managing Director at Motilal Oswal Financial Services. Motilal Oswal came out with its 15th wealth creation study earlier today. Mr. Agrawal, great having you with us, sir. Afternoon, Prashant this side. I'm going to come to what were the findings of this study and how do things look as we head into 2011 and all of that in a bit. Just wanted to get your thoughts on Hero Honda out of the way first. I know you've got a view, you like that stock for some time. Where does it go from here? Because, the view on the street is in both extremes. There's one camp which believes that its product portfolio X Honda will suffer a lot of damage. Competitors get a big foot in the door, can dent Hero Honda's market, etc. without Honda. The other view is that, they'll do just fine.
Yeah, I think business-wise, it is anybody's call because now it is a 25, maybe more, 27, 28 years old JV. So Hero Group Munjals have their own strength in terms of their understanding of the market. They have their scale. They have 3 factories working. They have cash reserves, and they have hopefully wherewithal to develop products which will be as good as whatever technology can deliver. So, that is one way to think, but clearly you cannot undermine Honda coming on its own in the marketplace. So, only time will tell, how the markets get realigned. People tend to overestimate what can happen in short term, and they tend to say they tend to think that something which is at 50% market share might come down to literally like zero kind of thing, and the whole thing will get shifted to something else. So I think there will be a lot of scenarios, and once we come to know what exactly Honda can do now in next 3-4 years, and what Munjals can do in Hero Honda in next 4 years, what will be the shape of JV in the next 3-4 years? We have seen only rumors, but we are yet to see the final print. And in what shape actually the JV breaks down, because if the management loses the credibility as a promoter in terms of integrity, or if the minority shareholders' interest is being sacrificed, I think then the whole impact could be very, very different. So I think one has to figure out, wait for the final agreement. What is it, and then I think we'll take call.
What would make the promoters, the Munjals in this case, lose their credibility? Can you put that in context?
Yeah, I think the benefits of the breakup should not go to only Munjals. I think it's a tripartite agreement between minority shareholders, Munjals, and Honda. So if Honda is going away, the loss is not only to Munjals but also to the shareholders. So it should not happen that one party gets all the benefit and second party gets all the flags. So unless what we are hearing is that the royalties will be jacked up, or they will pay minorities. The company will pay massive royalty to get the discount in the purchase price of the stock. So if that were to be so, in that case obviously it will impact the credibility of the management. But knowing them and their track record, I don't think they will structure anything so so unfair to the minority shareholder. That's the hope, because marketplace business is booming, business is going in good condition, they will make money. So that's one part of it. Secondly, so I think you summarized it well, saying that the whole issue is that of not one party getting benefited at the cost of other. Rest all in businesses it keeps happening. The opportunity in the two-wheeler side is very large, and I think it can accommodate another place. And so I think the competitive landscape, what happens to the earnings growth, that is one aspect of it. Second, I think more immediate challenges on what terms and how fair it is, the entire breakup of Honda and Hero. So I think once we come to know the full details of the agreement, which will be, I don't know, tomorrow, day after, whenever, then only we can take a stand whether it is fair or unfair.
Okay. As an investor, can you make that call right now? You know, if you've got stock, if you've held on, it's done well for you. What happens from here on? Can you do that at this stage? You know, because we know Honda is exiting. We know that much.
Yeah, that part is that risk one has already calibrated. The issue is that right now, as I said, I think the real problem is the terms. So if you are not sold in when the first rumors came, so there is no point in jumping the gun right now. So let's see the entire. I mean, I think whatever damage has to be done is kind of already done. So we need to look at the terms of the agreement and take a call on the thing post that, not now.
You think at close to where it is trading now, 1625, 1630, stocks fairly valued?
Yeah, clearly. I mean, at 15 times. I mean, they did last year 110, 112 rupees EPS, and current year should be close to more or less same or maybe a little lower, thanks to loss in the margins. So my sense is that stock at about 15 times, I mean, discount to the index valuation of about 19 times is a very fair price, and I would say it's rather on the cheap side, but for the developments which is happening right now. So once you know just on the earnings and what is expected, if nothing changes, then that is very, very reasonably priced. The issue is that we don't know the terms of the agreement, which thanks to these live channels, we have a lot of news flows coming in, which is not final in itself.
All right, okay, fair enough. We'll move away from Hero Honda, one particular issue, to the wealth creation study. You start your report saying the foundation of the wealth creation is in buying businesses at price substantially lower than their intrinsic value or expected value. Are you finding a lot of these businesses as we go into 2011?
It's not everywhere, but yes, I mean, selectively you do find opportunities, at least by my yardstick. I do find something here and there, and I mean, you don't need many ideas. I mean, I'm not looking for ideas every day. So once in a quarter, once in a 6 months, you can definitely find some good idea.
Why don't you share, some pockets for us? Last time we spoke, you'd spoken about Central Bank of India. What else?
See, we talked about, I mean, central bank again, the kind of financial sector opportunity it is there in the report also. In last 10 years, the total saving in the economy was about $2.25 trillion, about $2.25 trillion in last 10 years. The next 10 years expected savings are upwards of 11 to 12 trillion dollars. So the savings implementation opportunity for the banking system is going to be quite large. I mean, almost 5 to 6 times in next 10 years. So the banks which can hold on to their market share and improve their profitability, or even if they are very profitable, if they can hold on to the profitability, I think the amount of money they are going to make in next 10 years is going to be staggering. And fortunately, or whatever the situation is, but RBI is not in great mood to give licenses to too many guys who have wherewithal to scale up quickly. So whatever licenses come, they will start impacting maybe after 5-7 years if they are successful. So largely this opportunity is going to be encashed by the existing banking system. So there I think we are going to see a lot of opportunities. Even the large banks like SBI, HDFC, they are going to do very well. But I think if you want a really a stock which is going to do very well, I think you have to buy either a very large bank which is unpopular, or a small bank which is going to scale up very rapidly and scale up almost double or triple of what the banking system will do. So in the first category, large and popular, we were suggesting Central Bank of India. In the small, I mean small to medium but growing very rapidly, we have suggested Yes Bank. So that's how we have thought about it, but that's our understanding of things. I mean, if you have different understanding in this given opportunity, probably you can bet on some other stock.
Agrawal, good afternoon. Ira joining in as well. Let me just get some thoughts from you on the broader markets as well right now. You're saying that the Sensex earnings are still in a new growth cycle, but the headwinds that are coming in both from commodity prices, but also in terms of whether that pace of earnings growth will continue. You're sanguine about them, you're factoring them in and still saying that the earnings cycle growth is going to remain fairly strong going ahead?
Yeah, I mean, actually, for last 3 years, earnings have been stuck at about 830. This is the first year, 10-11, when the earnings are going out to 1050 with a 20-25% kind of growth. Analysts still estimate that 11-12 will also be a fairly good growth, and right now the kind of estimates which are lying, it looks at about 1250 rupees kind of EPS. But that's little 5-6 quarters into the future. So as we come closer to it, we'll be able to refine. But right now, earnings story, despite commodity boom and those kind of things, are not looking that out of place.
What are the risks, apart from, of course, some of the macro risks that I just alluded to? How much of a factor is this entire corporate governance story going to be? Because it's taken a fair amount of toll, at least on the mid-cap, small-cap corners of the market. People are saying that the end, you don't know where the end is, you don't know what is going to come out next. How much of damage is that going to do to our sort of market's perception, if not reality?
Yeah, clearly, this what has happened in post-Diwali in terms of scams and things like that, I think it is haunting everybody, local as well as global guys, and all the big investors are asking questions about this. So clearly, in mid-cap space, it is going to be far more difficult because generally the research coverage and the availability of information is very scanty. So it will be very difficult for anybody to figure out how do you go about it. So what will happen is that people will try to avoid that segment. But even in large cap, where almost you have 15-20 analysts sitting on each and every large cap, I think the real question being asked from outside is whether, particularly in the businesses where regulations are there and government touch points are higher, I think investors are going to become very jittery. So probably what can happen is that markets can get divided into two portions. One, where there is a very low interference of government agencies and things like that, and where businesses go normally. So I think that will be benefited and that will get related to much higher levels. And one segment where there is a perceived risk of government interference. So those will be priced much lower. And that seems to be the way I think markets are going to take.
Coming back to the report, Mr. Agrawal, you talk about investing based on the unknown and the unknowable. Can you sort of illustrate with examples which might fit that criterion? Does banking fit that criterion which you already spoke about? Anything from the present market condition which is unknown?
Yeah, I think see the issue is that what is unknown and unknowable. Unknown is something which is the outcome of the event, but you have to but the event is uncertain in the sense that the probability has to be put by you. But unknowable is something where actually you don't know what is going to be the outcome only. So you are investing into complete uncertainty, and or you can call it ignorance. So I'll give an example. Looking back in '93, when people bought into Infosys, I mean, of course, they knew about software, they knew the management led by Mr. Narayan Murthy and all. So those guys, they brought special skill or complementary skills or knowledge about the company, and they invested there. And though IPO was not that big a success, and it got modestly listed about 300-400 crores kind of market cap, but in 7 years, nobody knew that there is going to be a Y2K boom, there is going to be .com boom, and the company will go almost 800 to 900 times in next 7 years. So that is a perfect example of investing early in IPOs. So people, it's not that it's just a hypothetical case. People did invest with a lot of conviction in 93, 94, but they didn't know that they're investing into Y2K boom and things like that. And they got paid by 800, 900 times. So that's the, I mean, you invested in a huge situation, and then when the state of the world was known, you made a lot of money. So that's the perfect way of investing. Now you are asking me whether that kind of, what is my one scenario of you well into the future, and that's where I think we have explained the savings opportunity of India in next 10 years and what it could do to some of the businesses.
Okay, savings opportunity and what it could do to businesses. Mr. Agrawal, great talking.